client is different.
Hang on just a minute. I
Okay.
want to make sure that we're all good. I don't want people to miss this because it's so valuable. And I want to make sure on our Facebook Live that we are here. Are you seeing it on your, well, you probably won't see it on your end.
I don't see it in the group chat or in the group for the Sherwood Homes. Let's see if it's.
Now I have it going straight from my page.
Okay. No, I think I see it.
Okay, good. All right, so sorry for the delay there. So a lot has changed as far as the scores. I mean, I guess that's the hugest thing. I know I had a colleague who had a client that was FHA approved, and in the middle of the loan process, or in the middle of purchasing a home, when these numbers jumped to needing the higher credit score for the FHA, and then done deal. Couldn't
and it's
buy a house.
frustrating. It's so frustrating for the borrower wanting to buy a house, because this is a unique time in the industry. I haven't seen it do this before, where you think you have your end post in sight and then they change everything and they don't retroactive anything to say, well, now from this date forward, any loan application, they're retroactively doing it. And that means you can be in the middle of a process and now poof, we can't do it. And it's stressful and it's frustrating to explain to people, but trust me, all of the loan officers, we're sitting here crying at our desk every day when we're like, yesterday it was fine, today it's not. And it doesn't make any logical reason why they change it. That's my nice way of saying it. It's stressful for the people buying the house and for everybody involved. Is it all working?
It's hard.
Okay.
Yeah, definitely. Okay, so that's what's changed with the loans. How are you seeing the interest rates fluctuating as usual?
Well, we've been in this weird market for the interest rates. They are staying kind of steady. You see a couple knee-jerk reactions to the market changing because the market is very different, but we're still at great interest rates. I come from the environment, I'm kind of old. My first house, I was excited that I got an 8.5% interest rate. I thought I won the lottery. So, in
it's crazy, right? From years ago where people, were paying, just astronomically more than they're paying now. And then, but it's the buyer pool that's in there now that didn't see those super double digits, that don't have the perspective of, oh, this is a good rate.
Yeah. And it is, so I think the rates are great. They're still depending. Now, obviously, I have to do the little caveat, little legal thing. I'm just giving generics. I'm not guaranteeing anybody a loan, just giving you generic ideas of what the rates are. And they are literally, depending on your program, it can be anywhere from 2.5% to 7%, depending on the program, depending on your particular makeup. So I always discourage people to do a comparison with their neighbor, because their neighbor might have a 780 score on their credit score and their debt to income ratio may be down at 30%, and they're doing a 10-year loan. So their rate's going to be different than what you're going to get if you're doing a down payment assistant program and your scores are lower. So
like when you go and Google, what are the interest rates today? It's not accurate, because there's so many other factors that go into what interest rate you are going to be paying as an individual.
Yes, the bane of my existence. People going on, I equate it to like WebMD. Like I can go on to WebMD and I'll diagnose the heck out of myself. I'm always dying of lupus.
WebMD,
right? When I go see my doctor and he's like, "You're an idiot. That's not what's going on." Um, so when they post interest rates online, if you look at the very tiny writing on the bottom, they have to disclose this is for someone who has like a 750 credit score. They're putting 20% down on a conventional loan, and it's their primary house, because there's more than just the rate is not just your credit score. If you make everything else the same and you get me 5 different borrowers, the debt to income might be different on one client, and maybe they all have their set of credit score. Maybe someone's buying an investment property, someone's putting 20% down, someone's using a down payment assistance program. They're not going to have the same rates. It
Right.
just depends.
Yep.
So it's
important.
different.
Yeah, it's important for people to know that it
Yes.
varies greatly. Not, you're not talking, 10 points greatly, but
No,
it does vary depending on all of those factors. So it's important to not Google.
Well, there's great information,
Yeah.
but where you have to find the really good information is directly from Fannie Mae, directly from Freddie, and you're going to love trying to read those guidelines and understanding it, because it's a lot of, well, we reference this page to this page. Well, this page now is a new update, so it trumps that page, and it doesn't mean that means anymore. It's a daily update on what's going on. But
Yeah.
pre-COVID, you had more opportunity for more clients. They definitely are narrowing the pool of who can purchase a home. And it comes down to the employment rate. And it also comes down to the forbearance. That's having a great impact. And then delinquency and defaults on loans. So those big D's are what are really impacting what their guidelines are. And so the environment's a very fluid environment. Whatever's happening out in the world affects what loans we can and can't do. But it changes daily. They're opening some things up that they previously weren't allowing to do. So
right.
As the employment drops and we're able to resume and we're getting through more phases of COVID, we're going to see more guidelines lift. So don't lose hope that now today your loan might not work. That doesn't mean that next month or next week it might work.
Right. Right.
So that's where your loan officer is going to constantly stay in contact with you.
Yeah. Well, and you brought up forbearance, which we are covering on a live informational on Friday.
Yes.
So we're not going to go into it because that's a whole nother long topic. So we wanted to set aside a different time to do that. But I just wanted to mention that. So if people are interested in that, they can check that out on Friday on our live. So all right. So we did interest rates. We did what types of loans, and what types of loans now. Well, you covered that, or what types of loans are not currently being offered. Went over FHA.
Well, and also I'll kind of do a little caveat to that. There's something called overlays. So each mortgage company has what's considered an overlay that the guidelines with the government, Fannie, Freddie, that's where I'm typically referring to for guidelines. So those guidelines are set. Now, a particular mortgage company can choose to be a little bit tighter reined and add additional conditions saying, I will not lend any bond loans. In Washington State, there's the down payment assistance program, which is a bond loan. I know of about 5 different mortgage companies that now will no longer do those loans. Even though there's plenty of financing out there, a lot of money is available and we can still do them. The guidelines on those programs just changed. So some companies consider them too high a risk, or basically just not profitable enough for their company to want to risk their credit line to fund now at this point. They're trying to just keep their money moving. So a credit line is what helps all mortgage companies to fund the loans until they sell it. So keeping that money free, they decide that bond loans are too much hassle, not enough profit, too much of a risk, too high a default rate. So they're no longer offering them. So they put an overlay saying, we won't do them anymore. So the overlays for each company can be different. So if one company says they can't do it, a good loan officer will reach out to their other friends who are loan officers and say, hey, I can't do this program. Can you? Do you know who to send it to? So as loan officers, keeping us to communicate and talk and say, okay, I can't do this program anymore. Can you? And then the loan officer is making sure they go to the right person so that they can still get the house. I've had to do it on a couple of clients where there was a particular product went away with my company that I was previously at. I sent it to a different company. They were able to still close. And that's the right thing to do. You send it someplace else so that you can close.
Yep.
And that's where overlays are important to understand. It's not that your loan officer doesn't understand the product or can't do the loan. It's there's an overlay preventing that specific scenario from happening. So I always like people to make sure they kind of give their loan officers a break, because there is a reason typically why it can't be done at that company, or they want to send you someplace else. So it's always what's in the best interest of the client, the person borrowing the money. That's really what we try to do. So I keep open communication with other lenders. And I'm constantly saying, hey, what do you have that I don't have? Can my client go here? Can you help them out? Whatever is helping them to get the loan.
Absolutely.
It's important to keep that communication because it changes so quickly around here.
Yeah.
In this environment.
Yeah.
So that's kind of an important topic to make sure people understand that COVID does affect each company different.
Right.
So,
yeah. Very important. And to know that if you don't qualify, don't just give up.
Yep.
If your lender isn't looking for other lenders that can help you out, then you'll have to do that yourself. But there are, different loans with different companies.
And also the realtors are great at saying, hey, I know someone, talk to them.
Yeah.
If you ever have a problem with your loan, your realtor's your best friend. They're looking out for your interest. Talk to them and say, hey, look, this is what happened. Can you help me? And they can reach out to their other, because this is one thing I think realtors do exceptionally well. They talk to other realtors. They're like, look, I ran into this problem. How do I fix it?
Yeah.
So talking to your realtor and saying, hey, this isn't working here. And realtors will go, hey, let me dig into my bag of people that I know. Let's see what we can make happen.
Yep. Exactly. Exactly. So are you seeing an uptick in refinancing, or?
There is a huge uptick in refinancing, and this is an interesting tidbit about loan officers, is the way that they do their loans are going to be different for each loan officer. Some loan officers are heavy in refinances, and that's what they really focus on. Some are very much purchase oriented.
Right.
I am really anti-refinance for the most part. Not a very popular opinion in the loan officer business, because most refinances, if they're not in your best interest and the loan officer is pushing, let's be honest, it's for their pocketbook. And sometimes the refinance is not always the best option. There's ways to reconfigure, and sometimes it is. Sometimes it's the perfect reason to do it. There's a couple rules for refinances that I have as to when I really think it's worthwhile to do. But refinances are definitely happening because you have people who may have a 5% interest rate. They're established. They have some equity in their house now. It's a good time to refinance, especially if it was an FHA loan before, to change it to a conventional loan and see if you can reduce mortgage insurance or drop mortgage insurance.
Yep.
And mortgage insurance is a whole nother great topic too.
Yes, agreed. I just wanted to go on a tangent, but I'm like, no.
It's hard. There's just so much information in the loan industry to get out there that I just feel like just like to give as much information as possible. But.
Yeah. And I think a lot of times consumers are afraid to make that call, credit issues, or they just don't know. And so to make that call and find out, that's why I think this is good information, because they don't have to make the call. We're trying to get them all the information that they're going to need.
Mm-hmm.
But don't be afraid. I mean, the loan people I work with, like you, Angela, are all, great and willing to work and figure things out and get you on a plan, whether it's you're buying a house now or getting you on track to what you need to do from now to a year to 3 years, whatever from now. Mm-hmm. So it's just a matter of doing the right thing and what you need to do to get there.
Yes. Yeah. And again, as loan officers, we love it when you come out and reach out to us and let us help you get your credit where it needs to be.
Yeah.
Because I don't know about you, but the way I learned about credit was by screwing it up as a kid.
Yeah.
Because I didn't learn about it in school because that wasn't something they taught about back then,
right.
Way back on the prairie days when we went to school.
Right.
But we didn't learn, and I didn't learn until I screwed it up myself. And then, I got in the industry, and now I know all the tricks, and I can play with my own personal credit score, and I can make it go up or down 100 points in any given period. Yeah. It's really kind of fun to play with, and because it's credit scores are nothing but an algorithm. It's math. Yeah. Mr. Hallett will be happy to hear that. It's nothing.
Hey, yeah.
Right? All it is math, and it's just getting the right percentages to make it look good for what you need. And there's ways to learn how to use it. So any loan officer is going to love to help you learn how to do that so that you can get the best loan with the best rate. And sometimes it's not right now. Maybe we say, maybe we could get you into a house right now, but if we wait 3 months, we get you that better credit score, we're going to have a better loan product. And then you're not, stuck in a house that you just kind of like. We can get you into the house you really want.
Yeah.
So
Yep.
delayed gratification is huge.
Yep. And better terms. I mean, you're in a 30-year mortgage, you're in those terms for 30 years, I mean, is the idea, but typically not the case, but it's the idea.
Yeah. Well, and I always tell people that it's rare anymore. Back, you used to be able to, someone would buy a house and that was the house they stayed in forever. That was it. Yeah. It's not so much the case now. People change, they upgrade, they go down, they move around, different jobs. It's a little bit more fluid. People rarely keep a 30-year mortgage. People are rarely in a house for 30 years. And first time home buyers, it takes you a while to get to that dream house, as you know, and I know it. When I bought my first house, it was not my dream house, but it was a house. And typically speaking, every 20 years, a house doubles in value. So getting into a house now is still better than waiting 5 years and getting into a house. At least in that 5 years, you're building equity.
Yeah. Well, and the rental market has just skyrocketed.
Mm-hmm.
So, I mean, when you look at what you're paying in rent and what you can pay in a house payment, I mean, you're saving money. You get so many benefits from being a homeowner. So, yeah.
So many benefits.
Yeah. Agreed. Okay. So, are you finding that there's needing to be, when people are going to do a loan, that there, some loans are requiring reserves during this time?
Yes. Now there were always
more so though. I mean, like greater amounts.
Absolutely. Yeah. Jumbo loans are one that have a higher amount of reserves now than they used to. Mm-hmm. But yeah, there's a lot of programs now that are requiring some reserves, and reserves are typically talking to what your potential mortgage payment, your principal, interest, tax, and insurance, PITI, what your potential mortgage payment is going to be. You have to have a certain number of reserves in your bank account. And depending on the program, sometimes you can use your 401k as reserves, and sometimes you have to actually have what's called liquid assets in your bank account and use that as reserves.
Right.
So that is happening more on certain loan products, depending on what it is. We are definitely finding that. So it does require a little bit more in your pocket and your savings to be able to do that.
Okay. We missing anything? I don't want to not catch anything. I know we're going to talk about where you kind of see things going, but is there anything else pertinent to right now that buyers and sellers should know?
There are a lot of updates. So if you're in the middle of a loan, your loan officer is going to bite the bullet and call and tell you, hey, now we need to make sure we have a pay stub every single time you get paid. We got to have it documented. And the reason is because we have to make sure that you are not laid off. And we actually, a lot of places have implemented where we do what's called a verbal verification of employment the day you sign your papers. And I tell clients, honesty is the best policy. You got to let me know, because if you did get laid off, we're going to find out. Things are changing and so fluid that it's really paramount. Anything that happens, just send a quick email, quick text, just let your loan officer know, keep an update. But it's definitely more gruesome, the amount of documents that we need to have on loans. But it's all for a reason. And it just comes down to our current environment is just bizarre. I mean, I think none of us thought we'd be where we are with COVID ever affecting as many lives as it has. And my heart goes out to how many people are losing jobs because of it, and how many people are losing family members because of it. It's just, it's a historic time, and it's very, I think if you remember that, and because it's hard to remember that things are so different when you're stuck at home. But just to remember that we're kind of all got to figure it out and navigate it together. And it's also,
this is not just a few people. This is, I think, a super high percentage. Their lives have been changed in one way or another, whether it's kids are home, like, my 7 or 8 year old here homeschooling. Thank God for my husband. Whether they have kids at home or hours cut, or one, adult in the household not making income, both adults in the household not making income, businesses shut down. I mean, it's It's crazy.
Yeah.
I can't believe how many people are affected by
Are
this.
affected.
Yeah.
Yeah. And, a really good friend of mine said that, a lot of people say we're all in the same boat, but we're kind of not, because some people still have their jobs and some don't. And,
Yeah.
some people still have their loved ones and some don't. I don't get political at all. I don't believe in that. I
Yeah.
just believe in the human factor, and the human
Yes.
factor is just being compassionate with people. It's, you never know what's going on.
Yep.
And so compassion is
Agreed.
always the right answer, no matter what it is. But
Yeah.
everybody's been affected by it. It's hard not to.
Yeah. Oh, definitely. Definitely. It is definitely a challenge, to say the least. So where do you see things going in your many, 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 many years in
That's a nice way of saying I'm old.
the mortgage industry?
Yes. So
Seen a
it's
lot of peaks and
changing.
valleys. So yeah.
Yeah, but it's interesting because I see, just like every update, there's some great things that come out of it, and there's some horribly dumb things that come out of it. It's you can't win them all, but there's going to be some good things that come out of it. A lot of technology. There's some more advances in the security and the technology and the ease, because everyone's having to work from home. So, I see a lot of great things that will make loans faster and easier for clients in the future.
Yeah.
Um, I think it's also one of those that when the floodgates open and they finally lift some restrictions, we'll see a lot more homes being purchased. And I mean, and you could probably speak to this, but I'm still not slowing down on purchase business. There's a lot. People are buying
Yeah.
homes,
Oh
you
yeah.
know?
There's people buying. The problem we're having is there's not enough homes on the market.
Mhm.
I mean,
Yes. Yeah, there's not enough,
there's
not
not.
nearly enough homes. And so it's great if you have a house and you're putting it on the market, because you got a lot of people looking, going, I want this. I'm kind of intrigued to see, are you finding people who are actually putting their houses on the market? Is it because they've been stuck in quarantine that they're like, I'm so
Yeah.
sick of my house now, I want a different one? I'm kind of curious, like, is that
Yeah.
playing a factor?
No, I don't. I mean, not so far. Maybe by the end of this week, we're like, all right, now I can put my house on market and get out of here. But no, I mean, I think people are really holding off, not knowing. But honestly, if I could tell sellers, don't hold off. We have so many buyers looking for homes. I need listings. It's crazy. What you need to understand too, as a buyer, I have a lot of buyers coming and saying, well, I'm going to wait and see what the market does. And it's strange because we've been in a seller's market now for a while.
Oh yeah.
And so because there hasn't been enough homes for all the buyers. We don't have enough housing. Even with new construction, we are not building fast enough to meet demand.
Correct.
So buyers are looking out there, they're not finding what they're looking for. Prices are still continue to rise. There is a little bit of slowing in the rise of the prices. But man, yeah, we really need more listings. I have to tell my buyers, no, you houses are selling for ask, or 99.
Yeah.
Really, really close to asking on average. So it's not the typical buyer's market where you can, put a low ball offer. Now, if a house is a fixer upper or has been sitting on the market because of that reason or some other weird quirk or something, then maybe you can get a deal with some equity in house. But really, houses are selling for what the people are asking, because we just don't have enough on the market.
And I'm seeing constantly that my realtors, they're putting it on the market and it's sold in under a week.
Yep.
It's selling very quickly. So I definitely recommend anybody, if you're looking at selling your house, list it, because it's going to go.
Yeah.
It's not going to be like our typical timeframes. And I understand where people are, a lot of them are thinking that we're going to be back in a 2008 situation. And honestly, if we were going to be in that, we would have been in it at the very start of this whole COVID thing. But it's intriguing to see that even with our unemployment and our default rate, we're still default rate less than we were in 2008 before the indicators happened, from all the research that I've been seeing. But that default and that forbearance rate, those are going to have an effect on loans. And one of the nice things is, in the mortgage industry, we have the ability with the Mortgage Bankers Association, we get to have more of a voice with some of the laws that are happening. So that what we just found out yesterday, or was the 18th, They're blending together the days. The forbearance, it used to be that it would be that you had to wait 12 months out of forbearance with 12 months of payments on time made, and you have to be out of forbearance for 12 months, 12-month payments to the mortgage paid before you could sell or refinance. Well,
Yeah.
they just lifted that and changed that to 3 months now. And so I think a lot of people forget that even if you're in forbearance, you can't refinance, but you also can't sell.
Yeah.
So
Right.
once you're out of forbearance and you've made 3 payments, that's the newest update that we've received, you can actually sell or refinance your house again.
Yeah.
Forbearance is a whole nother topic. It's changing. So
Yeah.
the nice thing is we're seeing a lot of checks and balances that we learned from 2008 were already in place in 2015 with an update for the trade rules. And we're seeing that we're not going to get in that same environment because luckily we learned from last time how it was working.
Right.
And I think if people truly understand some of the stuff that happened in 2008 that was making that happen, truly making that happen is different than what the perceived idea of what it was that made it happen. But there's also checks and balances put in place to keep us from going back to that. Now, not to say that we couldn't get into a huge recession, but if we would have already been in it. I mean, we're quite a few months into this, and thank God we're starting to open up some phases now, which is good, so that we can help some more small businesses get back into being able to have employees. And I think that's what we're all hoping for: neighbors, friends, families, getting their businesses and their lives back to whatever our new normal is. But as far as waiting, I mean, you can ask anyone who says, well, what's going to happen? And if anyone says definitively they know what's going to happen, I feel like they started day drinking at 9 a.m. I'm just going to say they started drinking because nobody knows. None of us know. There's people far smarter than I am, far been in this industry a heck of a lot longer than I am, that still go, man, I don't know. We can look at the models, but is it definitively going to happen? We don't know. Have we got more checks and balances to hopefully prevent it from happening? I think so.
Yeah.
So,
and we haven't been in a global pandemic in this time, you know what I mean? With all the technology and everything that we have going on. So yes, we have had pandemics, but it's different.
I know it's always
it's a different day, different things, different lives, everything is different from
it's different, and you hope that we've learned from it. That's all we're supposed to do as humanity, right? We're supposed to learn from our mistakes and hopefully make them not happen again. Do I think we're going to start lifting some guidelines in the COVID world, rules for lending? I think so, but obviously it's going to be the major lift is going to happen is going to be once unemployment rates drop back down under double digits. I think once that happens, we'll start seeing a little bit more of, I always picture the lending, the purse strings. They're tightly holding on to it right now because they don't know what's going to happen, and that's why we have these guidelines kind of cinching down smaller and smaller. But as they see that more people are out spending and unemployment's back to where it's a decent unemployment, not that I think there's any acceptable unemployment rate, but you know what I'm saying. Once we kind of get back to a lower percentage, they'll start opening up those purse strings, as I call it. And I think it'll happen pretty quickly, just as quickly as it kind of happened with the updates. And trust me, like a bunch of my clients, I have them just we're working on credits. We're just working on a couple things. And when things open back up, I just see a flood in the market that I think it's just people are gonna be like, okay, we're ready. And but it's still a great time to sell your house, just to, nothing else, you're probably done with it. And I feel like everyone's probably done some improvements to their house since they've been stuck.
Right. With the crowds at Home Depot, you would think so. These houses should be looking fantastic.
I'm one of those people that was at Home Depot trying to do some of these projects. I'm like, well, honey, we don't have anything else to do in this evening. Let's do a project.
Yeah. No, that's the case. And that same in the real estate world, they're, predicting that when things are looking like they're looking ahead, things are going to be opening up, then the floodgates are, open. But I mean, honestly, business as far as real estate, it's still ticking on. Luckily, we have the technologies that we have, where we can get things done without much intrusion, and video open houses and all these things that we can do. So
Yes.
it's thank goodness for those technologies
Yeah.
that have been able to
Yeah.
continue
Well, and
on.
that's the same thing as there's so many updates to how we can do our business. I actually think in a lot of ways it's good because it pushes people out of their comfort zone and try to find a new way. And there's some really brilliant things that come out of adversity
Yeah.
in any industry. It's made some things easier. There's more of a DocuSign for aspect nowadays.
Yeah.
There's one of the first things, I think a lot of the issues that we had when first COVID was coming out, and we were dealing with it, title companies have been amazing to respond. They do a lot of mobile notaries so that there's less,
Yeah.
interaction.
Mhm.
They do it they're very good about keeping it as careful as we can. And I applaud people who are using creativity to find ways to make it work. And
Yeah.
like realtors being able to do open houses on video. I mean, what a fun, great way to do it. I almost feel like that might be the new way to show a house. I mean,
Yeah, sure.
a lot easier.
I think people on the technology fence before were like, have been forced to go and push themselves, like you said, out of your comfort zone and into new things that they weren't quite doing yet. And same with companies. Well, I don't know if this, distance telecommuting is, an option. And they're finding out, oh, wait, it is an option.
Yeah. And in some cases, it's more productive and it's more cost effective.
Yeah. Well, just like, my brokerage, EXP, where we're a cloud-based company. There are some brick and mortars, but the basis of this company is cloud-based. So you don't have the brick and mortar and the expense. So, I mean, we were already there. Thank goodness, all the technologies. We just had our, summit that we were able to postpone a couple weeks that was supposed to be in Florida, was just online with our avatars, and it was great. And I think other companies being able to do those things too, it's been great. So.
And it is kind of nice to see that we didn't really need to have a meeting, that an email works just fine instead of having a meeting. I mean, I think all of us will admit that, gosh, this is kind of nice. Just send a little video, give us some information, an email. I'm good.
Yes.
Do it in my PJ pants. So
for sure. I think the businesses, the businesses that have been able to adapt and come up with creative ideas through this, because you've had to. I mean, if you're going to survive, you've had to figure something out, with your regular brick and mortar business. So I think on the other side of things, there'll be several businesses that come out better and stronger and more, more streams of income or ways that they're making money because they've expanded their minds to the possibilities and different things. So I'm excited for that. I'm happy that a lot of businesses have done that. And on the other side, of course, there's businesses that
are suffering. I mean, our restaurants are having a hard time. Our families, we're a large family. We don't typically eat out. And I've actually been doing more eating out to support more of the local communities because they're kind of their income is down. And so absolutely win-win. If I don't have to cook dinner and I can go get delivery, kind of my kids like it. So but yeah, I mean, they've been more creative too about the delivery, and then it's still not near what it would, and I can't wait for restaurants to open up and go support my local restaurants that I love to bits. And because there's so many good ones that it's just
we do love to eat.
What are some of the favorite restaurants in Sherwood that you like to eat?
Well, I've been wanting to try Mason's. I haven't been there. Their little restaurant downtown. And then of course we have our coffee shop, which actually they were able to turn a window into it. They didn't have a drive up. Symposium. And so they created one out of a window. They got a permit to do it and created because they, otherwise, So
that's really an addition to be able to do.
It worked. They made it work. And it was pretty cool. And then our bakery recently opened up for pickups. So that Hungry Heroes. And so that's good. Hungry Hero. I always want to add an S. But yeah, I'll just be anxious to see that because, we Sherwood, we have that cute little downtown area that's usually packed with people walking down, and it'll be nice to see businesses open up. 503, our wine place, Uncorked. I've gotten wine for closing gifts from them. They've done curbside, bring it out to you from, I think really quickly they adapted that, you know, and found ways, and they do to-go platters. But it'll just be nice to see downtown open up, and of course outside of downtown as well. But yeah,
It's such a cute area. It is so cute.
I love Sherwood.
Very cute area.
So, okay, so Friday we are going to do a live talking about the forbearance at, are we gonna do 2 o'clock?
I believe we're 2 o'clock.
Okay,
Yes.
2 o'clock live on Friday, the
Mhm.
22nd, which is actually my husband's birthday.
Oh,
So we will be diving deep in depth on forbearance. So I hope people come and bring questions. I know there are a lot. I know I have heard like so much different information from people, and some of it makes me cringe because, you know, at the end of this, I don't want people to have been told something that's incorrect and then be like, oh my gosh, and they're in a financial hardship even more so. So if we can help to avoid that, that would be absolutely wonderful.
because unfortunately I do hear people giving wrong advice about it. And you know, I'd hate for somebody to have financial ruin because of it. And it could very easily go into that if it's not handled correctly. So
Yeah.
and I hope people ask lots of questions. Any question off topic, weird, lots of loan questions. I love. And if I don't know the answer, I'll go into our industry and I'll look up the actual answer.
Yeah.
So, because there's no way anybody can know it all. There's just too many programs.
Yep.
Too many.
Yep. And if somebody can't attend the live, I'm encouraging now to message me ahead of time with questions, or Angela, and we'll make sure we get those covered during that live on Friday, the 22nd at 2 o'clock.
Yep. Perfect. Thanks.
Thanks, Angela. We'll talk to you soon.
See you. Bye.
Bye.